I'm going to go ahead and get started. Good afternoon. My name is Skylar Sims. This is Achiko Upchurch. We are with the PCAOB's Office of the Chief Auditor, and it is a pleasure to be here with you today. So first, we do need to give our standard disclaimer that this presentation is provided in our official capacity as PCAOB staff members, but the views expressed are our own and do not necessarily reflect the views of the board members, or other members of the staff. So before we get into today's agenda, we thought we would talk just a little bit about the standard setting process to provide some background. So this slide highlights OCA's key activities. So starting from the left, we monitor current and emerging issues, as do our inspections colleagues, to inform the board about matters that could potentially warrant changes to PCAOB standards or that warrant additional staff guidance. The evaluation of these matters may result in a project being added to the research agenda. Some issues may necessitate the issuance of guidance or an inspections focus. So we do devote resources to monitor issues, including observations from oversight activities that may merit further consideration. The middle box, research projects. This is where we're looking to determine what regulatory response or responses may be needed. For each research project, a team is formed to perform research, outreach, and economic analysis to assess whether there is a need for changes to PCAOB standards and consider alternative regulatory responses. Not every issue leads to a standard setting. In some cases, additional guidance may help address a particular area. What makes us unique among standard setters is having our inspections function in-house, which is always looking at compliance with the standards and practice, and greatly informs what we do. Looking at the far right box, the box describes our standard setting process. This starts with developing proposed standards or amendments to standards and opening these proposals up to public comment. So while we are not required to, the PCAOB has historically followed a notice and comment process for changes to standards and its rules. In addition to being a good process, it gives the SEC more comfort that the board has followed due process with respect to our rulemakings. So anyone can submit a comment letter in response to an open proposal. We solicit views from all stakeholders, firms, large and small, investors, academics, others, and we take all comments into account during the rulemaking process. Proposals also frequently includes lots of questions. This is in part to highlight specific areas where we would like to obtain input. But all input is helpful to us. We generally post comment letters to our website as they are received. We do this so that our stakeholders can see what commenters are saying. Once we analyze feedback from the proposals, the board determines next steps. In some cases, changes are made and additional input is needed. For example, a reproposal or a supplemental request for comment. In other cases, the project moves straight to the adoption stage. It's important to note that for our standards and rules, once adopted by the board, they do not become effective until they are approved by the SEC. As part of our standard setting process, we also develop implementation resources, some of which we'll discuss later here today. So it's important to point out that we seek external input in advance of proposed rulemaking. On this slide, you can see some of the resources that inform our standard setting process. So these include the results of our inspection and enforcement activities. For example, numerous inspection deficiencies in a particular area may indicate that there is a need for staff guidance or a change in the standards. Our work is also informed by the activities of other regulators and standard setters, such as the International Auditing and Assurance Standards Board and the Accounting Standards Board of the AICPA. Engagement with investors and other stakeholders, including through the PCAOB's advisory groups, such as the Investor Advisory Group and the Standards and Emerging Issues Advisory Group, the SEAG for short. The IAG brings the investor voice to the PCAOB's agenda and oversight priorities, while the SEAG provides technical and policy advice on auditing standards and emerging issues. These two groups provide advice and insight to the board on matters related to the PCAOB's work. We also discuss each project with SEC staff, and we take their views into account as we develop the solution to the problem we are addressing. Economic considerations involves economic analysis conducted by our colleagues in the Office of Economic and Risk Analysis. The economic analysis normally includes a consideration of the need for the project, the baseline of the current requirements and practice, reasonable alternatives considered, and an analysis of economic impacts as a result of the changes. Other relevant inputs and developments can also play a role. For example, academic research, other publications. I'd like to echo Board Member Calabria's call and reiterate how important it is for us to hear from smaller firms about our standard setting projects and proposals. While we don't currently have any outstanding rulemaking proposals, as you heard earlier, the board is seeking comment on its strategic priorities. That request for comment includes several questions about standard setting and the direction that the board should take. You all have a unique perspective, and I encourage everyone to provide their views through the comment process. Okay, so let's transition into our agenda for today. First, we'll provide an overview of the amendments to PCAOB standards that have been adopted and are effective for audits of financial statements for fiscal years beginning on or after December 15th, 2025. Then we'll discuss standards and amendments that will become effective later this year. Our focus will be on highlighting several key provisions of these rulemakings. We will also provide information regarding available implementation resources that you can use to support your firm's efforts in applying these new requirements. Lastly, we'll touch on specific resources available for smaller firms on the PCAOB's website. And as a reminder, you can submit questions that you have throughout using Conferences.io, and we'll make every effort to get to those during today's presentation. So this slide lists the standards and amendments we'll be discussing today. So first up will be the amendment to AS 1215 that accelerated the documentation completion date as part of the AS 1000 project. And then we'll take a deeper dive into the technology amendments. The longer formal name is on the slide, which affect AS 1105 and AS 2301. And lastly, we'll offer a few reminders about QC 1000. Our agenda today does not include discussion of the standards on the auditor's use of confirmation and the general responsibilities of the auditor. Those were effective for 2025 calendar year end audits. However, if you do still have questions on those standards, we encourage you to submit them in Conferences.io. Again, we'll be happy to address those given time at the end of this presentation. So I'll now hand it over to my colleague Akiko to walk us through the first two agenda topics.
Next page right now. Thank you, Sky. With that, let's start with our first topic, a reminder about the 14-day documentation completion date. So the AS 1000 rulemaking included an amendment to AS 1215, changing the documentation completion date from 45 days to 14 days, meaning that a complete and final set of audit documentation is required to be assembled for retention as of a date not more than 14 days after the report release date. The board implemented a phased approach to the effective date of the amendment. Firms that provided audit opinions for 100 or fewer issuers during the calendar year ended December 31st, 2024 had an extra year to comply with that requirement. As a reminder, for those firms, the 14-day documentation completion day requirement became effective for audits of the financial statements for fiscal years beginning on or after December 15, 2025. So in short, all firms will need to comply with the new date for 2026 calendar year end issue audits. The first code for today, our session, is 231. The CPE code is 231. 231. Let's turn now to the technology amendments. The amendments affect two auditing standards, AS 1115 on audit evidence and AS 2301 that addresses the auditor's responses to the risk of material misstatement. They will take effect for audits of financial statements for fiscal years beginning on or after December 15, 2025. The board adopted the technology amendments in response to the increasing use of information in electronic form and technology-assisted analysis in audits. In recent years, auditors have been using technology-based tools to obtain and analyze more information in different ways. For example, some auditors are using a data analysis tools to compare company-produced information to auditor expectation or third-party information for an entire population of transactions. These amendments were designed to clarify the auditor's existing responsibilities in areas where technology-assisted analysis is often used. They also aim to reduce the risks that auditors issue reports without sufficient appropriate audit evidence when such tools are involved. So one point I would like to emphasize, the technology amendments apply to all audits conducted under PCAOB standards, not just when technology-assisted analysis is used. Moreover, there's no requirement in amendments for auditors to use technology-assisted analysis. As we are all aware, technology is advancing at a remarkable pace, with many tools now incorporating artificial intelligence. It's important to recognize that the recent technology amendments do not cover every aspect of an auditor's use of technology-based tools. However, these amendments represent a critical step forward in modernizing PCAOB standards. So with that background, we'll discuss the key amendments, starting with those made to AS 1105. The amendments made to AS 1105 address several areas. First, a provision was added clarifying that if the auditor uses an audit procedure for more than one purpose, the auditor should achieve each objective of the procedure. We have observed that the audit and evidence obtained from an automated audit procedures can, in some cases, be used for more than one purpose. For example, the procedure may identify payments to new vendors, informing risk assessment, and match approved purchase order to invoices and payments, which would be a test of details, addressing occurrence of expense and obligations. In this case, the auditor is required to achieve each objective of the procedure. This generally involves clearly documenting the purpose, objectives, and the result of the procedure. Next, several amendments made to the description of both relevance and the reliability of audit evidence. The amendments emphasize the importance of appropriate disaggregation or detail of information to the relevance of evidence and the importance of control over information technology and automated application controls to the reliability of the evidence. These clarifications were necessary given the auditors are obtaining and using larger volumes of information in electronic form from the company. The last amendment to AS 1105 is a new paragraph A10A, a 10 cap A, that relates to evaluating the reliability of information provided by the company to the auditor in electronic form that the company obtained from one or more external sources. We would like to spend a few minutes walking through this requirements in more detail and discussing its application, which will also cover the related board policy statement issued in September 2025. So next slide. So this slide presents the full text of paragraph 10 cap A. Before we dive into the details, I want to provide a little bit of background on this provision. So ASC 1115 establishes auditors' responsibility for evaluating the reliability of audit evidence, whether the evidence is in paper or electronic form. This responsibility applies to all evidence, no matter where it originates, whether produced internally by the company or obtained from external sources. When using information produced by the company, auditors are required to test the information for accuracy and completeness, or alternatively, to test the company's controls over accuracy and completeness. This requirement has been in place for some time. Today, most audit information is provided to auditors by the company electronically, and it often includes information that the company received from external sources. Before providing external electronic information to the auditor, the company receives, maintains, and in many cases, processes the information. Because the company exercises certain control over this information before it is provided to the auditor, certain procedures are necessary to evaluate its reliability when the information is used as audit evidence. This is essential in addressing the risk that electronic information from an external source may be modified by company's processes prior to being provided to the auditor. The new paragraph 10 cap A clarifies how the auditor's existing responsibilities for evaluating reliability should be applied to external information in electronic form provided to the company and used as audit evidence. So, what type of information is subject to paragraph 10 cap A? We said it was information the company received from an external source that it provided to the auditor in electronic form. So in practice, this could be, for example, electronic copies of vendor invoices or contracts originated from external party, customer order information, shipping information from third-party carriers, or bank statement. The key here is that it is information the auditor is using as audit evidence. So in the risk assessment procedure, test of controls, or substantive procedure. The paragraph 10 cap A does not apply to electronic information that is produced by the company or obtained direct by the auditor from an external source. So let's break down the specifics of that paragraph. When applying the requirements, auditors required to the subparagraph A, which is obtaining an understanding of the source of the information and the company's process for receiving, maintaining, and processing the information. And subparagraph B, which is testing the information to determine if it has been modified and evaluate the effects of those modifications, or test the company's control over receiving, maintaining, and processing that information. Understanding the company's process over the information as described in subparagraph A helps the auditor determine which approach described in subparagraph B to testing the information is appropriate in the circumstances. This understanding also helps inform the extent of procedure necessary. So for example, if the company's process of involving the information are very straightforward, only involving a few basic steps, or modification to the information are not substantive, so simply converting data format from international ones to EHUB style, less testing may be necessary to evaluate the reliability. On the other hand, more robust procedures may be necessary if the company's processes are complex or involve modification that can negatively affect the reliability of the information. So for example, if the company has multiple subsidiaries and are using different ERP systems, and the company may convert the information to the parent company's ERP system before providing to the auditor. It is important to note that when we talked about modifications, we don't only mean intentional changes. The nature of a company's process involving the information may also introduce unintentional errors. As just shown on the slide, when applying the subparagraph B, the auditor has two testing options. Testing the information to determine if it has been modified, or testing the company's controls over the information. The auditor may apply a combination of those two approaches. We may be asking yourself how much testing is required under subparagraph B of paragraph 10 cap A. And that question has certainly come up. And the answer is, you can probably guess, it depends. The paragraph 10 cap A does not prescribe the nature, timing, or extent of procedures necessary to comply with the requirement. It also doesn't prescribe manner in which items are selected for testing. Auditors are not required to test every piece of external information provided the company to the auditor in electronic form. Keep in mind the purpose of this requirement is to evaluate the reliability of the information that is being used by the auditor as evidence, and it's not to audit the external information. Just like other provision in AS 1105, paragraph 10 cap A is principle-based and scalable. A few minutes ago, we talked about how the auditor's understanding the process involving the information can help inform the extent of procedures necessary to evaluate reliability. But there are also other factors that help the auditor make the determination. How is the information being used? For example, is it used in a risk assessment procedure, or is it a substantive procedure performed to address and assess risk of misstatement? What type of material misstatement is being addressed? For example, is the information being used as the evidence to address the higher assessed risk? How important is the information to the auditor's planned response? For example, is the information the only evidence the auditor obtains for the relevant assertion? So when thinking about the extent of procedures needed to evaluate the reliability, a combination of these factors would inform the auditor's approach. One additional important point I want to make that the procedure performed to comply with the paragraph 10 cap A may not necessarily be separate and distinct. The results of other procedures the auditor is performing may satisfy one or both subparagraph of paragraph 10 cap A. The slide provides two of such examples. The first one is the procedure that the auditors perform to obtain an understanding of each component of ICFR under AS 12110 may satisfy the requirement in subparagraph A. For example, if the external electronic information is an order submitted via the EDI as part of understanding the company's ICFR, the auditor may already have the understanding of how customer orders submitted to the company via EDI are received, processed, and maintained in the company's ERP system, satisfying the requirements of subparagraph A. The second example is the test of controls of substantive procedures, test of controls or substantive procedures performed in response to the assessed risk of material statement may address the auditor's responsibility under subparagraph B. So for example, as a part of the auditor's substantive procedures over income taxes, they may compare the statutory tax rates included in the electronic file provided by the company to the statutory rate published on the respective taxing authority's website. In this scenario, the auditor's substantive procedures, in addition to being part of the response to assess the risk, would also satisfy a subparagraph B related to the reliability of the statutory income tax rate information. So the key here is that the result of other procedures need to address the provision of paragraph 10 cap A. So in the second example, if the if the auditor's understanding or testing of the ICFR testing covers the company's controls over receiving and processing the information, but not including the maintaining any part, that last part, the auditor may need to augment that testing to cover maintenance of the information in order to comply with the subparagraph B. Some additional information about the paragraph 10 cap A. We mentioned earlier that a question has came up and about implementation and particularly about the extent of testing necessary to comply with subparagraph B. During the rulemaking process, commenters requested implementation guidance, and SEC encouraged us as the PCAOB to issue such guidance. In response, last fall, the PCAOB issued 2 documents that address implementation of paragraph 10 cap A. The first one is board policy statement that describes certain circumstances in which the board will not treat the absence of separate testing under subparagraph B of paragraph 10 cap A as a non-compliance with the PCAOB auditing standards. So said it another way, the board policy statement acknowledges that in certain circumstances, auditor may not need to perform separate testing specified in the subparagraph B if the auditor concludes that there is no more than a remote possibility that the information used as audit evidence has been modified in a way that would render it unreliable for purpose of the audit. The auditor's conclusion would be based on 3 things. The auditor's assessment of risk of material misstatement related to relevant assertion for significant accountant disclosure, the importance of information used as audit evidence in relation to the auditor's planned response, and the result of certain audit procedures, including those procedures performed to comply with the subparagraph A of paragraph 10 cap A. The second document is a staff guidance that provide examples illustrating how auditors can comply with the provision of paragraph 10 cap A, including applying the testing exceptions discussed in the board policy statement. Hopefully you will find these documents helpful. While we don't have any information today about additional implementation resources, we encourage you to sign up for alerts in the event that additional guidance is issued. I thought earlier today we received a question regarding the applicability of paragraph 10 cap A, which was the earlier section in the broker-dealer section and discussing auditing revenue. And as we just covered earlier today, right now, paragraph 10 cap A applies when the information was received by the company under audit from an external source and provided the company to the auditor in electronic form. So this would involve thinking about where the information originated from. Did the information originate from the outside of the company, or did it originate at the company? And the next code is the Q925, the CP code. The next one is 925. One last time, it's 925. Okay, now we have discussed the AS 1105 amendments. I would like to turn to the changes made to AS 2301. As part of technology amendments, a new section was added to AS 2301 that describes what constitutes testable details and specifies the auditor's responsibility when designing when investigating the items identified through testable details. These amendments are necessary because in practice, terms like data analytics created confusion about whether a procedure qualified as a testable details or whether it would be considered more of an analytical procedure. The distinction is important because the PCAOB standards require auditors to perform a testable details when responding to a significant risk of material misstatement. This has not changed. The classification of the procedures depending on the auditor's audit objective, not on whether technology is being used. So let's look at the first paragraph in this section. As shown on this slide, paragraph 48 of AS 2301 states that testable details involves performing audit procedures with respect to items included in an account or disclosure. When performing testable details, the auditor should apply audit procedures appropriate to the particular audit objective to each item selected for testing. For example, testable details could include procedures to test the dates of a sample revenue transaction to evaluate whether the revenue was recorded in appropriate period. So in another example, procedure could involve testing whether interest expense was recorded in accordance with the contractual terms of the company's debt agreements for each company loan and population. There are just a few examples. It's worth noting that the PCAOB standards do not define the term items included in an account or disclosure. Given the wide range of accounts and disclosure may be subject to the testable details. This term align with the existing terminology in AS 1105. Consistent with practice before amendments, the auditor determines appropriate level of disaggregation or detail based on the facts and circumstances of the audit, including assess the risk, the relevant assertion being addressed, and the objective of the procedure. When performing a testable details, an auditor may identify items that warrant further investigation. These may be balances or transactions that contain certain characteristics or are valued outside of a range. The amendments to AS 2301 clarify that investigating those items is part of the auditor's response to assess the risk of a material misstatement. For example, using technology-assisted analysis, an auditor may compare the quantities ordered on a customer purchase order with the quantity shipped per the invoice for all transactions in the revenue account and identify transactions with differences for further investigation. Under new paragraph 49, the auditors are required to investigate those items to determine whether the items are individually or in the aggregate indicate a misstatement or control deficiency. Paragraph 49 does not specify the nature, timing, or extent of auditor's investigation procedures. Instead, the auditor determines the extent of such procedures in accordance with PCAOB standards. So in some cases, the auditor may be able to group identified items because they share a common characteristic and perform additional procedures at the group level to determine whether items identified indicate misstatements or are control deficiencies. In other cases, the grouping may not be appropriate. So in the previous example, the auditor might determine the differences in quantities for a group of items explained by the unit of measure conversion from the pounds and ounces and pounds. So the auditor could then perform procedure over that group to evaluate whether the differences indicate a misstatement or control deficiency, and perform a separate procedure on the remaining identified items. The last amendments to AS 2301 applies to testable details that involve selecting specific items with an account or disclosure for testing. When auditors select the specific items for testing, new paragraph 50 requires the auditor to determine whether the remaining population poses a reasonable possibility of material misstatement. If such a risk exists, additional substantive procedure to address that risk are required. These requirements reinforce the auditor's existing responsibility under PCAOB auditing standard and existing risk-based auditing principles rather than introducing a new concept. So that covers the amendments made to AS 2301 by the Technology Amendment Project. The next code is 893. Next code is 893. One more time, 893.
Okay, so I think we're going to go ahead and transition to QC 1000. Full disclosure, there is a huge fly that has been antagonizing me.
Oh, really?
You guys saw it? Okay. I'm trying to be calm, but if I get up and run, Kiko will finish, okay? So.
Oh, you can come back. Oh, we will patiently
we'll
waiting for you.
How this goes. All right, I'm frazzled. Here we go. All right, so the last standard setting topic that we'd like to touch on today is the new quality control standard, QC 1000, a firm system of quality control. On the screen, you'll see the areas we plan to cover. We have discussed QC 1000 at these forums before, so today we'll just provide some highlights and some reminders. But before we get into the slides, I'd like to provide an update on some of the recent developments related to QC 1000. So last fall, the board delayed the effective date of QC 1000 and the amended standards, rules, and forms by a year. As it stands today, the new standard and related amendments will become effective on December 15, 2026. This means that a firm's QC system needs to be designed by December 15th, 2026, and a firm will need to be ready to start implementing and operating it from that day onwards in accordance with QC 1000. What drove the board's decision was the feedback received from various sources that some firms have encountered implementation challenges. The board felt that a longer runway would allow firms to work through those implementation challenges and to comply with the requirements in a thoughtful way, rather than rushing to meet the deadline. More recently, Chair Logophetis mentioned in his directive for the staff to develop, for the board's consideration, a request for comment to seek public input on narrow revisions to QC 1000. And while we don't have details we can share today as to the specific revisions that will be subject to the request for comment, I did want to make sure I note that that will be forthcoming. So with that, let's go through some of the QC 1000 basics. QC 1000 is a new standard that supersedes the existing QC standards, QC 20, QC 30, QC 40. It also supersedes the existing SEC practice section, known as the SECPS requirements. The standard requires an annual evaluation of the firm's QC system and related reporting to the PCAOB. Now, we have received questions regarding how to find Form QC for reporting, and it is accessible on our website. If you go under Rules of the Board and then Forms, it's also included in Appendix 2 to the adopting release for the standard. In connection with the adoption of QC 1000, the board adopted other changes to its standards, rules, and forms. These include, among other changes, expanding the auditor's responsibility to respond to deficiencies on completed engagements under an amended and retitled AS 2901, responding to engagement deficiencies after issuance of the auditor's report. Also, the board replaced its existing ET 102, Integrity and Objectivity, with a new standard, EI 1000, Integrity and Objectivity, to better align the board's ethics requirements with the scope, approach, and the terminology of QC 1000. On this slide, I've just got a couple highlights of what has changed from the existing requirements to the new requirements. I'm not going to read all of these in detail, but at a high level, QC 1000 sets forth a risk-based approach and provides requirements for risk assessment, for quality objectives, and for specified quality responses. So what's the objective of a firm's QC system under QC 1000? Well, QC 1000 specifies that an effective QC system provides a firm with reasonable assurance of two things. One, the firm, each member of firm personnel, and other participants conduct each of the firm's engagements and fulfill their other responsibilities that are part of or subject to the firm's QC system in accordance with APLR. And two, that each engagement report issued by the firm is in accordance with APLR. This is referred to as the reasonable assurance objective. So the concept of reasonable assurance is consistent with QC 20, which is the board's quality control standard currently in place until QC 1000 becomes effective later this year. However, QC 1000 does go further, and it extends the reasonable assurance objective to cover not just the firm and its personnel, but also other participants. Firm personnel and other participants are two important terms defined in QC 1000. Firm personnel is in paragraph A5, other participants is in paragraph A7. And again, I urge you to read the standard and review the resources available to you to understand these two terms. It's very important that you appropriately identify your firm's people resources as either firm personnel or other participants, because the requirements of the standards apply differently between the two types of resources. Specifically, the QC system does not need to operate over other participants. Instead, a firm will need to understand how other participants fit into the firm's performance of engagements or its QC system in order to identify specific quality risks and then develop quality responses to address those quality risks. On our QC implementation page of the PCAOB website, which I'll show you in just a few moments, you can find the adopting release as well as guidance documents and staff presentations that go into detail about this topic. All right, so now that we've covered the objective of the system, let's just briefly talk about the components of a firm's QC system under QC 1000. So QC 1000 shares the same basic structure as other quality management standards, including the same 8 components: a risk-based approach to quality control, assignment of an individual to be ultimately responsible and accountable for the QC system as a whole, assignment of individuals to 3 roles of operational responsibility that are substantively the same, many of the same quality objectives, and many of the same specified quality responses. QC 1000 also includes requirements to annually evaluate the effectiveness of the QC system and to report to the PCAOB on the firm's QC system evaluation. The standard also includes requirements that address documentation of the QC system, which are not included on this slide. If your firm is subject to the requirements of other quality management standards, you do not need to maintain separate quality control systems, one for QC 1000 and one for ISQM1 or SQMS1. Firms can develop a single QC system for their entire practice that satisfies PCAOB requirements and the requirements of other professional standards to which the firm is subject. Now, while QC 1000 has certain additional and more stringent requirements, firms can integrate these into their unified QC system, eliminating the need for multiple systems Many of the same policies and procedures developed under another quality management standard will also be applicable for QC 1000. So QC 1000 is designed to be scalable to all firms. I want to highlight a few areas where the standard is particularly scalable for a smaller firm. So first, remember that firms are required to apply a risk-based approach, which is inherently scalable to the design, implementation, and operation of the QC system in the context of their own audit practice. The standard provides that the firm will tailor the design of its QC system to its specific facts and circumstances, such as the size and the complexity of the firm, the types and the variety of engagements that the firm performs, the types of companies for which it performs engagements, and whether it is a member of a network, and if so, the nature and extent of network relationship. Next, I want to remind you that the requirements of QC 1000 are only applicable to engagements, which are defined by QC 1000 basically as engagements performed under PCAOB standards, either led by the firm or in which the firm plays a substantial role in the preparation or furnishing of an audit report. The firm's QC 1000 compliance system is not required to operate over non-PCAOB engagements. For example, audits under AICPA or audits under international standards. However, a firm is welcome to design either part or all of their QC system to do so if it is more efficient and effective. For example, a firm may have the same policies and procedures when it comes to compensating and promoting firm personnel, regardless of whether those individuals work on PCAOB engagements or non-PCAOB engagements. However, that same firm may have certain incremental policies and procedures specific to PCAOB engagements, for example, related to ethics and independence requirements when auditing issuers. Finally, I want to remind firms with small portfolios of PCAOB engagements that QC 1000 permits firms that issued engagement reports for 5 or fewer engagements for issuers, brokers, and dealers during the prior calendar year to include audits not performed under PCAOB auditing standards in their engagement monitoring activities. Similar to when firms are selecting engagements for engagement monitoring, any non-PCAOB audits selected for monitoring are required to be done so taking into account the factors that are in paragraph 64 of the standard. Also, importantly, if non-compliance with applicable auditing standards is identified on a non-PCAOB engagement, the firm is required to evaluate whether similar engagement deficiencies exist on its PCAOB engagements, and that's under paragraph 68D of the standard. And then also under paragraph 72 of the standard, the firm will be required to evaluate whether a QC deficiency exists. Finally, non-PCAOB audits are not permitted to be included in the monitoring that's required under paragraph 62B, which requires the firm to inspect on a cyclical basis one completed engagement for each engagement partner. Now, I want to highlight a few resources that are available on our implementation website. I want to make a quick plug for our quality control implementation page. This page provides an overview of the standard, information about how to contact the PCAOB with questions, and a number of resources and tools for implementation. We've provided a number of staff guidance documents to assist with implementation, including a comprehensive staff guidance over QC 1000, and then one also over AS 2901, a practice aid that provides high-level overview of certain features that are unique to QC 1000, and then we also have posted a tabular comparison of QC 1000 with ISQM 1 and SQMS 1. We also have a series of knowledge checks and staff presentations on that page. Additionally, at the bottom of the QC implementation page, you'll find our interactive chart, and this is a handy tool for someone who is looking for implementation resources related to a specific aspect of QC 1000. So for example, if someone looking for ethics and independence resources can click on the icon on the interactive chart and find hyperlinks to the resources that are available that are related to the topic. In this case, it would be a guidance document, a knowledge check, and a staff presentation. Finally, the staff has conducted extensive outreach. We've hosted in-person QC workshops tailored to smaller firms during the summer of 2025. Each workshop included hands-on scenario-based activities and discussions. We then converted that same content into 2 virtual workshops, Part 1 and Part 2, which we hosted in July of 2025. Those sessions were recorded and made available on our website, along with the QC 1000 workshop handbook. So we continue to update the page as we develop additional implementation resources. I'd like to remind you that there are implementation pages for all of our recently adopted standards and amendments, and those are a great place for you to find any implementation resources that have been issued in connection with a particular project. So the QC 1000 implementation webpage also includes a phone number and form for contacting the PCAOB regarding standards-related inquiries. I would encourage firms to reach out with questions. We can't always answer all questions because they may be based on specific facts and circumstances, but we may be able to answer yours or point you in the right direction or ask how you have considered certain matters in designing your QC system, especially where you think there is a difference between what ISQM1 and SQMS1 require versus QC 1000. We do understand that words matter, but not all differences result in a substantially different way of doing things. If you are subscribed to PCAOB News, you'll get a notification when the page is updated with new resources. If you have not already subscribed, today is a great day to do that. And your next CPE code is 194. 194. And then I'd like to also point out some of the other resources that we have on the PCAOB website that are specifically geared to smaller firms. So on the website, under resources, you will see a link to information for smaller firms. And this slide depicts what you'll see when you first click on that link. As you scroll down the page, you'll see a variety of information, including links to various resources. You'll also see some resources in the form of videos. Earlier, our DRI colleagues went through a couple of items related to audit focus, series, and spotlights. Those are available there. And then another recent development I want to mention is the formation of the Smaller Firm Resource Group in summer of 2025. This group is comprised of representatives from smaller firms that advise PCAOB staff on their experiences with applying PCAOB standards, inspections-related activities, and economic considerations. More information about the Smaller Firm Resource Group can be found on our website under Working Groups and Task Forces. And then one last note, on the bottom of the information for smaller firms page, you have the ability to sign up for communications that are relevant to your practice. So you can choose exactly what you want to receive communication on, and it's a great way to stay current on all of our activities. Okay, we can see where we are in time. It's about
Yeah, I think we'll probably wait until 10, right?
Yeah, all right, let me keep going and then we'll take a look at the end. I just have one more slide that's actually pretty important, interacting with OCA. So we have several mechanisms for members of the public to connect with the Office of the Chief Auditor. And I'll go ahead and just highlight a few of those. So firstly, as mentioned, you can send us a question at any time using the Contact the PCAOB feature on our website. There is an option to select standards, and you can either submit your question through the website or you can call the provided telephone number. Our numbers are also on the cover of any of our PCAOB rulemakings. So again, you can reach out with questions, you can reach out with suggestions for training or implementation tools, or for more forward-looking topics, like where you see the standards needing to change for where AI is headed. Additionally, as Chair Logofetis mentioned at the board's most recent open meeting, the PCAOB is designing a formal consultation process within OCA to provide timely guidance on complex or novel auditing issues. More information on this process is forthcoming. And then finally, the PCAOB has recently launched the Audit Practitioner Fellowship Program. The purpose is to bring professionals with recent real-world experience into the PCAOB. Their insights will help strengthen our ability to anticipate what lies ahead and enhance our own understanding of the most pressing issues affecting auditing. I would also like to highlight the comment letter process that we talked about earlier. I strongly encourage firms to participate. When it comes to implementation challenges, providing input on the why or the scenarios where it's unclear is incredibly helpful to the board. Our economist colleagues always ask for data, costs, benefits, and this is specifically helpful in that regard. So with that, we'll conclude our presentation. Thank you for your time. I don't think we have any questions there. So we hope that this has been informative to you. Thank you very much for your time.